All right, everybody. Welcome back to the Crypto Power Hour. Hope everything is streaming correctly everywhere. We got a lot to talk about on this one, and we have a lot of guests. So I'm just going to let everybody kind of start, introduce yourself, and then we'll kind of go from there. Andrew, I will start with you.
Hello, everyone. My name is Andrew Gordon. I'm an attorney and CPA at the Gordon Law Group, and I've been practicing in crypto tax since 2014, helping clients report crypto on their taxes, defending audits, and even criminal investigations.
Nancy. Hi, everyone. My name is Cassie Wolfe, and I'm a moderator here in Ethereum.
Hey guys, my name is Brock Collins. I run a educational group for cryptocurrency trading. I've been trading the market for the last 6 years, and I specialize in technical analysis.
Hey guys, Wayne Marcel, go by Blockchain Wayne, longtime cryptocurrency educator, currently head of business development for FIO Protocol.
Hey everyone, my name is Daryl. Been in crypto for about 10 years now, doing everything from mining, trading, farming, investing. Also work full-time in tech as a senior solutions architect.
I think Georgie's screen may have froze, but if he just come back and join us, we will let him in. He's also in a conference right now, but like I said, we have quite a bit of news has happened within the last 24 hours in crypto, everything with Binance and FTX. If anybody wants to kind of give us a quick intro, Georgie, if you can hear us.
Oh, sorry guys. I've been dealing with some computer issues. My name's Georgi. I'm the CEO of Orox. It's breaking up. My name's Georgi. I'm the CEO of Orox, and we're basically an all-in-one trading terminal. We're about to release our Web3 wallet in the next few weeks, and excited to be here.
All right, awesome. Like I said, we have a lot of news to cover. Everything with Binance and FTX. Cassie, do you kind of want to give us a super quick rundown? I know there's like a huge amount of stuff that can be covered, but I want to get into what everybody's thinking. If anybody is hurting personally from this, just what everyone's thoughts are.
I mean, I can give the summary that I provided in the chat. So let's see here. So Binance was an early investor in FTX, and FTX took off pretty quick. They became the #1 exchange. Steve Curry, Tom Brady, those were two of the big marketing deals they had. Actually, I posted a meme about this, and some of you argued with me about it. Let's see. So SBF became the famous Fro of crypto, and they then became competitors. So Binance was #1. FTX, sorry, I'm trying to read these notes. Basically, Binance decided to sell its stake in FTX. And as part of the buyout, they agreed to take $2 billion of it in the FTT, the token that FTX created, and that they use for trading fees. So now Binance and FTX are friendly competitors, and Binance owns a ton, about $2 billion of FTT. And there's not a ton of trading volume on FTT right now, and this is important. So 2 days ago, CZ comes out and says that SBF has been talking crap about them to regulators and lobbying in a way that would hurt Binance. So he announces publicly on Twitter to his 7 million followers that he's going to dump his entire $2 billion FTT stash. And anyone holding FTT knows this is bad news, right? Anytime a whale dumps it, it affects everyone. $2 billion of sell pressure would crush the price. So people start to panic and they start selling, and the price of FTT drops like 15 to 20% overnight. Nobody wants to buy FTT, too risky. And so everybody's selling. So the numbers are going down. Enter Alameda. So this is a hedge fund market maker Sam started before FTX. But then news leaks showing that, the news links showing that Emperor has no clothes. So they have $12 billion in assets, $7 billion in liabilities, but half of their assets are an FTT token, which is plummeting, and a liquid. Alameda might, sorry, I can't see it. Let's see. Alameda might die, and if Alameda is in trouble, FTX might be too, because they're kind of sister companies. So market makers on FTX, and they start possibly holding and trading customer deposits. So the relationship has been unclear for a long time. Most people think of FTX as a blue chip company. Sam is famous, he's a genius. So everybody's basically waiting for he or Alameda to show that they're in good health, but they were not in good health. So Sam tweets on Twitter saying everything's fine, but everybody knows that's not the case. Alameda CEO comes out and says that they will happily buy the FTT token as it plunges 24 hours pass. If they had the financial strength, they would have shown it by now. So this starts to feel like Steady Lad's moment right before Luna collapsed, when people were freaking out and people start withdrawing funds from FTX. So $1 billion withdrawals. FTX is facing a liquidity crunch. Then today, or actually this was yesterday, Sam comes out and says that they're entering a strategic transaction with Binance. CZ clears it up. Basically, FTX was in trouble. They considered Binance was going to bail them out. And I think up until this point. What was that? Did nobody else hear that?
I think it was just feedback.
Whoa. Okay.
Sorry.
So, but to my understanding, right now, does anybody actually know if Binance is still considering buying them out?
I think that they went through and looked at the numbers and apparently didn't really agree with them. So there was a lot more liabilities than they were willing to take on. I'm not sure if Binance ever really had the intention to buy them out.
It's just
I don't even know if they got to look at the numbers. They, started to see everything transpire, the SEC probing FTX, and I don't think they got deep into their discovery before they even decided, like, this isn't worth the risk.
They're not going to touch it. Well, and the other thing that comes into play here too, so Alameda, if I'm saying that right. So they were one of the initial backers for Solana. I don't know if anybody's been watching Solana's price. It has tanked, and that's a big part of it too. So if they decide, if they have to basically get liquid, right, they're dumping Solana. And that's why we're seeing such a huge drop in Solana. I think it was like, dude, it went down to like $12. I
love that yesterday you saw Binance, Coinbase, and even Gemini come out and say, like, they don't leverage against user funds. They never loan it out. They always hold it and protect their users. Whereas you saw FTX go and completely leverage user funds on there and take out loans and stuff to do big, very risky trades. And, you had all these other companies, the CEOs come out and say, look, everything in the US, you're safe. Like Coinbase, we don't loan out your funds. Gemini, the Winklevoss twins, they did the same thing. And even Binance said, we keep things very liquid. We don't do the shady practices that FTX did.
Yeah. Well, and that's part of the reason I love, well, I'll be fair. I'll be honest. I don't really trade on Binance's platform, but CZ has a wonderful business sense, and it seems like they're pretty solid. I know a lot of people don't really like Binance Smart Chain, but I think they have a pretty bright future.
But that's also kind of the problem, though, is you're still relying on this third-party company, and FTX was saying they have the gap, your financials, audits, they have their internal team, etc. Like, you never know. And to be honest, after being initially when we started Aurochs, we weren't really in the depth of the crypto market itself, so we didn't really understand exactly what was going on behind the scenes. But over the past 2 years, we've learned that there's a lot of companies, some companies that we've come across that are doing the exact same thing that FTX is doing. They're misappropriating funds. They're using those funds for to sometimes line their pockets, which is the worst thing with FTX. At least, I guess their benefit of the doubt was that they were trying to expand out their business and trying to invest in companies. It's not a good thing, but we've come across companies that are literally just doing it for their own benefits, for founders and for the CEOs to line their pockets with money.
Right.
And it's one of those unspoken things. And I think a lot of companies our size and maybe even larger than us, when they're smaller than these exchanges, like going against them publicly is a death sentence. Then if that exchange, like if we, for example, had discovered something and came public with the issues that were going on with FTX, even if it were true, we would have been blacklisted from every centralized exchange and every big company almost immediately.
Wow.
It's kind of the same thing you see, with the Me Too movement and things like that. People weren't coming forward because they were afraid that they would lose literally everything. And it's kind of a hidden secret that's been going on for a long time, to tell you the truth.
I think
I
Sorry,
think
go
there's it's a pretty big issue in crypto where people are using sister companies or basically using liquidity that they don't have to leverage capital that they don't have, and even reborrowing off of capital with several, like the same sort of using that as credit with several different sources and leveraging. And that's, this whole market, it is getting over leveraged on things, and you don't see these things come to fruition until we do hit a bear market. The thing that I think is interesting is that, you've got these people are very wealthy. They should have access to some very intelligent traders, people that understand a market and, understand market cycles, and should be able to withstand something like this happening. But it's the same as, a normal end user, a person, anyone behind the computer, right? These guys get greedy and they over leverage themselves. And this is where I think regulations and everything come into it, is these guys aren't being properly audited. And again, they'll use sister companies. So even Tether, right? So Tether used to be backed 1-to-1, but it included their subsidiaries, right? So Tether also owns Bitfinex. So they could essentially print $1 billion worth of Tether, buy $1 billion worth of Bitcoin, and then that Tether would be backed 1-to-1 by the $1 billion worth of Bitcoin it had in their assets. So you end up in this perpetual loop of just being able to borrow as much money as you, and like literally printing money and having your assets backed 1-to-1. And I think this is where regulation and everything is going to come really important, and these projects getting properly audited and making sure they're not misusing users' funds. Like, as an exchange, your job is to middleman a transaction, right? You should not have access to those users' funds. It shouldn't even come into question. How is an exchange supposed to go into liquidation, right? They have one job.
Right. Yeah,
But
absolutely.
isn't that
This isn't the first time that this has happened either. And even this year, Celsius, Voyager, and those are U.S. companies. And I think as a result of these companies having these issues, we're going to see more regulation. And regulation is not going to be necessarily a bad thing. If we look at Celsius, Voyager, FTX, to your point, Brock, they had one job, right? In the example of Celsius, it's hold customers' crypto, make loans, pay interest to the holders, and make a spread. Exchanges, similar business model, right? Where in that is invest user funds and don't protect against a down cycle. Because you're absolutely right also that I think greed really came into play, and they saw these funds on hand that in a bull market that we're experiencing in 2021, they thought there was opportunity to make more money instead of just sticking to the business model. But also, I think what we're going to see is a movement towards proof of reserves, having actual audits, regulations that require certain reserves or liquidity for exchanges and platforms. So I think we're going to see more of that over time.
But isn't that what, crypto was trying to eliminate from the early point, is eliminating that middleman. I feel like we're going into this cycle of, we eliminated the middleman initially when Bitcoin was first started, and now we have this middleman that are stepping in and doing the same thing that banks were doing. So it's like a complete disconnect from the reason that people are wanting to use crypto. I think the regulations, even if they do come in play, it's not going to really fully protect everyone when there is that middleman, because we've seen it from the traditional finance. There's Lehman Brothers and so many big banks that have failed because they were literally committing fraud on the same exact scale as FTX, Celsius, etc. And that's why Bitcoin really started to take off. I think although the regulation is going to be great for business or great for crypto to control this middleman, but to go back to the core values of crypto, we need to keep eliminating the middleman as much as possible through decentralization.
Well, and I think transparency is key,
Yeah.
right? And that's one of the basic tenets of blockchain and Bitcoin is that there's a public ledger that everyone knows and can be held accountable. But that went away with these new platforms, right? No one knows what's really behind. Sorry, some audio. And so perhaps even a movement towards, again, proof of reserves, greater transparency, and so that the public can audit, right? Georgie was talking about how even if you suspected that FTX had some wrongdoing, you couldn't call them out, and there wasn't necessarily direct evidence. But if it was all public on the blockchain, then everyone would know, and we can always hold these companies accountable.
So on that accountability side, Andrew, from a legal perspective, like FTX was doing this all with their international companies. Like, who would have jurisdiction to even go after them? Like, FTX US is safe, but who would be the type of organization to actually go after them for criminal activities?
And that's an awesome point, right? And that's one of the reasons why exchanges often form outside the US, especially to begin, is because the lack of regulation. There were countries such as Estonia in the past that tried to have licenses and bring exchanges. But the reality is there really is no central body. It's wherever you're operating in or have customers, then that country perhaps can go after you. And that's why, for instance, Binance, non-US, FTX, non-US, many of the foreign exchanges restrict US users to try to avoid SEC scrutiny. But on a global stage, there is no regulatory body. If there are some countries that are more aggressive, China, to a limited capacity EU, but overall, there's really no one out there. So if you form in the Cayman Islands and run an exchange, you can operate it as you see fit, which is exactly why we keep seeing the same pattern year over year with these exchanges, international exchanges failing.
Brock, you're muted.
Oh, Brock, you.
Still, there you go.
There we go.
Yeah.
Oh,
Still muted.
still muted.
Still muted.
There you go.
There we go.
We good?
Yeah.
All right.
So
So as I
rehearsals,
as I
Brock.
was saying,
So yeah,
I think
for
I think the solution is transparency over regulation, right? So regulation, as you said, it's so hard to have control over that, and also the whole founding principle of crypto was to get away from having that and having people in control of their own money and having people more peer-to-peer transactions and having stepping away from governing bodies. So by making things more about transparency, then people are able to draw their own conclusions. They're not dependent upon regulations and things like that to make their decisions for them. It's putting that power back into the hands of the people, which, as I said, is what the purpose of crypto was to begin with.
Yeah, I think the biggest thing we're going to see from all of this is just a push for people to realize that custody is key. I always tell people only keep on exchanges what you're trading. If you're not trading it, get it off. And even this scenario, I didn't have really much exchange exposure. I didn't use FTX, but even in general, because the only thing I have on there is what I'm trading. But it even had me evaluate what do I have on hot wallets versus cold wallets. And funny, while we're sitting here on this call, I'm actually moving some from my hot wallet over to my ledger just because, custody is key. And, people get upset about all these exchanges that are failing, but, Georgia, you brought it up earlier. I mean, everybody's like, fuck the banks. And then we turn over our crypto assets to entities that operate just like banks.
Yeah.
So it's important to realize that I think we're going to see more decentralized solutions. I know Cassie was mentioning earlier her fondness of CZ, and while the verdict's still out on him in general, I've been in calls with people from Binance recently, and we talk about their focus because how we can utilize our protocol in their platforms. The majority of the focus is on the decentralized portion of it, not necessarily just the the centralized exchange. And the same thing when I have calls with Coinbase as well, is because they realize events like this are definitely going to be a catalyst that's going to move more people off of exchanges. But that, the future is pretty much going to be majority majority decentralized in terms of we can control our assets. Why would I need to use a centralized exchange when one day I just be able to plug my ledger up to it, execute some trades, or maybe just shift over what I want to trade and leave my balance on wallets? And that's what we're going to see, I think, kind of evolve from this. And we needed a black swan event to find this bottom. Hopefully this is it. I don't know. What do y'all think?
I'm still expecting another leg down.
Yeah.
Hoping.
So with the market cycles, right? It's in the big boys' best interest to push the market as low as possible. And if they run out of a bottom fast, then they're not going to be able to accumulate at the lows for as long as they intend to, right? So, the longer that we consider these bottom, the more they can kill sentiment. And now it makes the most sense for them to keep driving that down further and further and further, right? Because what they want is when they start pushing the market up, when we enter like a markup phase, they don't want retail traders paying attention to Bitcoin. They don't want them jumping on that boat. They want retail traders getting in at 40, 50, 60K and pushing to new levels, to new highs. The big boys don't start buying on the way up, right? They're buying in that accumulation phase. They're buying when everyone stops paying attention. So to me, it makes the most sense for, and if you see this all the time, media outlets, they'll post China bans Bitcoin for the 8,000th time, all of that stuff. These guys, they have a vested interest, right, to push out these articles through media outlets and things like that, so that they can drive a narrative through the crypto space. My favorite thing to trade around is counter trading overall sentiment, right? You need everyone to be so upset with Bitcoin that they have no intention to buy it ever again. And you've seen it in every single bear market, right? It's crypto's dead. It's never coming back, blah, blah, blah. And we'll sit at these lows for so long. Everyone gets bored. They stop paying attention. So I think now is the best time for them to continue with this negative sentiment, drive it to lows, and get all these weekends to fold everyone. So, I personally, everyone's looking at 12K, which is why I know we're not turning at 12K. I'd put a substantial amount of money on the fact that we won't go to the level everyone's anticipating, because they don't want retail traders loading up, right? So, it made more sense to me for them to either turn at 20K before everyone had a chance to get in. And now that we've lost that level, it makes way more sense for us to break underneath 10K and get maximum liquidity, maximum pain. Because if you want to invest $1 billion into something, right, you need $1 billion worth of people on the other side of that trade. So you need all of them weekends to fold so that you've got liquidity to position yourself in the market. And that's why you get capitulation. That's why market cycles work the way they do, because markets work in like 4 phases, right? You have accumulation, markup, distribution, and markdown. So these big boys will want to drive this negative sentiment. And I think there's a very big chance we spend the next year in a very cold crypto winter and rally 6 to 9 months before the crypto halving, the BTC halving.
Yeah, when you mentioned the big boys and everything, there's one thing that actually just a few months ago, or just a couple of weeks ago, JP Morgan had been so against cryptocurrency CEO for the longest time. And in the background, JP Morgan, they're investing in as many technologies as possible because that's what they do. However, the fact that they're now starting to transact on Polygon it's a little different. It's not just an investment. They're actually trying to take advantage of the technology. So, I agree with you that some of these bigger companies, they might have missed out initially investing in Ethereum and some of these in Bitcoin, etc. And now there's a chance for them to drive it down and get in as low as possible.
And that's how most markets work, right? If you've got more of an asset than anyone else, you're in control of the market, right? People talk about, it's manipulated. So is the foreign exchange market. So is every asset class. So is oil. So, I've seen trading oil. I've seen oil hit a major level, and then Somalian pirates find a boat, and then the market crashes over. It's like a very minute amount of oil, but people will use that sentiment to push the market where they need it to go. And you watch it time and time again, right? You approach important levels on the chart, and some news will come out that will align perfectly with this level to break through or to turn it the other way. And the more you look for it, the more you start seeing. And like all of these markets are manipulated, and so you can get upset about it, or you can learn to read the way it works and get on the winning team. But yes, I think for anyone, the best strategy is probably looking at dollar cost averaging. But most people aren't comfortable with sitting underwater for 6 to 12 months. If you really believe in the future of Bitcoin, how many times have we not eclipsed the all-time high? Where we're more than we sold off 70 to 80%, and you're scared to be underwater for 2 weeks. Like it's so I think if you chop, it's not financial advice, but if you chopped your money into sections, right? So say you took 30% now, 33%, if we sold off 4K, another 33%, then your dollar cost averaging as we're going down, it's just people want to catch the exact bottom, deploy all of their capital at once. And like, that's not how it works. Even institutions, right? They buy in trenches. So on the way down, you find important levels. And then if you get close enough, you're good. It's not as difficult as it seems to be for people to get, it's patience over everything else, and discipline and emotional resilience that I think will make things easy for people.
Yes. I love that. Thank you. I've had many really amazing conversations with Brock about trading, and I always get excited when he talks about markets and cycles, and he understands it so well.
Yeah, I didn't mean to throw you off base there, but I do have to throw up that none of this is legal or financial advice.
Yes.
My favorite things that I have to throw out there.
I appreciate
it in the beginning because I really, really, really wanted to dive into exactly what was going on. Now, I'm going to ask Andrew, because we've had a similar situation with Celsius. If FTX, if there is a bankruptcy, what are my chances of getting my funds back, and can I claim them on my taxes?
Sure. So FTX, at least as of now, we're not talking about FTX. It's just FTX, the international company. And so it's unlikely that they'd be filing U.S. bankruptcy. From a tax perspective, though, if you had crypto on FTX, you might be able to claim that as a loss, which it's not ideal that you've lost your crypto on FTX, but if you can at least take a tax deduction as a result, well, then at least there's a little bit of a bright side. In general, the loss needs to be certain. So there can't be any question as to whether or not you're going to get it back in a period of time. But then if that loss is certain from U.S. tax perspective, you can take a deduction for your cost basis, or the amount that you paid initially for that crypto. So there might be opportunity. We've even seen today, I saw on Twitter that there were several hedge funds that had written down their investment in FTX or Alameda to zero, thinking that it was going to be uncollectible. So consult your CPA or tax professional, but there might be an opportunity to take a tax loss for your FTX holdings.
And I should actually piggyback on it because FTX has been going up and down. If you don't know what your funds are, make sure you at least export that information and screenshot it just in case they go completely offline. Otherwise, I would imagine it'd be pretty difficult to claim losses without any proof.
Yeah, thank you. Awesome advice. One of the most difficult parts of doing your crypto taxes is actually getting all your transaction history together. And we see it time and time again when exchanges go down and it's difficult or impossible to get the data. The IRS still expects that you get it and still expects that you report. So now is an awesome time if you haven't already. Like Georgie said, download your transaction reports, get all those records, because you don't know what the future will hold.
Smart.
Now I'm going to jump in here again. I'm going to try to kind of pivot because Binance and FTX weren't the only huge news that kind of dropped. I kind of want to talk about a little bit the SEC winning their case against Library. It seemed like that happened and that was pretty big, and then all of a sudden everything kind of hit. But I'm just curious to know what your guys' thoughts are on the situation and how it's kind of looking for the big battle, which is the SEC versus Ripple.
So with that, I've been following it pretty closely because of the process that we're going through with now with the SEC and stuff. It's kind of it's set a pretty significant precedence, to say the least. Now that company, from what I know from the background that I found out about them, is they were being extremely aggressive in their marketing, to say the least. And they kind of did come off as that they were using their token as a security in a way. But the ruling made it seem, and the judge's statements made it seem like almost every token, if not every token out there, can be classified as a security, even if it has a lot of utility built into it. And that's one of the things that we're concerned about. Obviously, I think a lot of other companies, I think Ripple is probably extremely concerned about that, because all the judge has to do in that case is now say, hey, this judge ruled this, they set a precedence, and all of a sudden everyone's in trouble. So it's something that we're keeping a close eye on, because that ruling was just extremely severe. And I think that's why the SEC went after them, because it was a slim down case for them. They could get a slim down case because the CEO and the founders were doing things that made it seem like a security. And now that the judge has ruled in a way that, makes it seem as though every token out there is a security, independent of what the utility is, it kind of set a pretty dangerous precedence. And I'm hoping, I don't know, well, we have our attorneys, we work with Gordon as well, and everything. So hopefully we get some clarity on that, and hopefully it does not impact the XRP case and everything else moving forward.
Yeah, so the majority of SEC cases or investigations settle. I don't know the exact statistic, but likely in the high 90% that settle without actually going to trial. Here we had a trial and a decision by a judge. And so like Georgie was saying, now we have a precedent that other judges can cite to. And here we've got a pretty strong precedent with respect to saying that tokens could be found to be securities. One of the defenses that the company had argued was fair notice, that the SEC didn't fully apprise everyone of what exactly is a security in the context of tokens or cryptocurrency. This is important because this is the same type of defense that Ripple is also raising. And we recently spoke about the discovery that was happening with Ripple getting the SEC's information on why in the past one of the chairmen had said that Bitcoin and Ethereum weren't securities. So there's that entire fair notice argument on, you can't enforce a law if it hasn't been, if people aren't notified about it, if people don't know about it. But in this case, the judge found that that argument didn't have merit, and that there was adequate case law, the Howey test and so forth, to show that, yes, this was a security. Now, how will this bode for Ripple? Hard to say. Different courts, but at the same time, it is at least some precedent that can be cited to by the judge in Ripple if they so choose. So be interesting to see how that plays out. But I think everyone that's operating in the crypto token space has to take note of this case and try to learn from it and see what we can do in the future to try to stay outside of the SEC's crosshairs.
Now, Andrew, I've heard a lot of people talk about that Howey test. Is that something you could try to explain easily?
Yeah, sure. So the Howey test, it was a Supreme Court case that happened decades ago. I actually don't remember, but decades ago, well before the internet, and really had nothing to do with technology overall, but sought to define what is a security. And the basic definition is that if you're seeking investment with an expectation of profits through the efforts of a third party, so efforts of someone else, then that is a security. And so if you're buying a token with the expectation that there's going to be profits, and that token is ran by a third party or an organization, then that looks and smells and seems to pass the Howey test.
Interesting. So like most people buy crypto thinking like line go up, they want to make money. How does some crypto pass the test and some fail the test? Oh, he froze. Or maybe I froze.
No, I think he froze, but I can jump in while he comes back.
Yeah.
The one issue with the one issue right now that's going on is that usually when you list on a centralized exchange, they ask for like an opinion letter. You have a legal opinion letter to determine whether the token is a utility or security, and they utilize the Howey test to do that. The problem is that it's kind of become a facade in a way. Those legal opinion letters, they get issued left and right. And it doesn't really, it's basically the exchanges saying, hey, this is the law firm that said it was a utility and we're going to trust them, and that's why we're going to list you. But in reality, SEC doesn't really care about that, to be honest. SEC is still going to go after the exchange. SEC is still going to go after the creators of the token. And the main problem with this ruling with the LBRY is that the judge basically came out and said, even if it has a utility, even if you mentioned, for example, the demand of the network, like for example, let's take Ethereum as an example, the demand of Ethereum grows, then that means that the utility token is potentially going to appreciate in value. And that was the one defining thing that I found. And again, we're still trying to research into everything that the judge ruled, but by saying that the demand of the actual product itself is growing and the token is the utility of that, then the general public can assume that the price is going to go up of the token. And that's what kind of changed things a little bit. And that's why that ruling is pretty significant. And it honestly got brushed under the whole FTX issue, which is very minor to what that ruling really is. It's set a pretty dangerous precedence, and we're really actively looking into it ourselves.
So, yeah, this is. I actually wasn't following this. I missed this. Does anybody know if they're planning on appealing?
I'm uncertain, but I woun't be surprised if they do. But the standards on appeal get harder, and the Howey test actually came from a Supreme Court case. So there's the potential, but on the other hand, it is very costly and becomes increasingly difficult to win on appeals as well. So I guess we'll see what happens. I don't know if Georgie, if you have any insight on that.
Yeah, I think I heard that they were going to appeal, but I mean, as you know, going against the government and winning a case is pretty difficult. So I would imagine the appeal is even more difficult. And I don't know how much money they actually have, because that company hasn't really been in the kind of in the limelight recently. So I'm not sure if they've run out of money. And I mean, I would imagine that the SEC case that just ended probably cost them a lot in the first place, and the appeal is going to cost them even more. So they did, I think, claim that they were going to appeal, but I just don't think I don't know if they
go anywhere. Yeah. No, it's really interesting. And I read like a Reuters article, and it was talking about how they were a New Hampshire based company. This goes back, and it's unfortunate. We were talking about decentralization earlier, right? And how like the core foundation of Bitcoin is that decentralization and having control of your money. And I just don't see how this isn't going to result in more companies just going offshore, so they don't have to deal with jurisdictional issues over here.
Honestly, that doesn't matter. And I guess when Andrew joins, again, it really doesn't matter if you're offshore. You could have your company based on the moon. If you're in the United States as a person, or if you're in another country that has legal framework with the United States, they'll just extradite you. It really doesn't matter where you're at. If the company's in Europe, Asia, China, Russia, whatever, if the founders are in the United States, they'll just go after the founders. The offshore entities really protect you from maybe like civil lawsuits and things like that. But at the end of the day, if the SEC comes after you, SEC, FTC, FBI, whatever it might be, they're going to find you. If you're offshore, they're going to extradite you.
And I guess on that topic, and sorry to miss a few minutes, we were actually the lead defense counsel for John McAfee. And John was indicted on tax charges. And as a result, there was an Interpol red notice, like the shit you see on TV, for a guy on tax charges. He was also indicted on securities charges as well. But, like G was saying, they want to find you if you're a U.S. person or you violated U.S. laws. It doesn't matter where you are. It doesn't matter how you set up your company. Even if you're living on a boat, they'll find you.
Find you. Yeah. Wow.
I'm gonna hop in here real quick. I'm gonna hop off. I gotta go back to the conference. I appreciate everyone. Thanks for having me, Andrew. Everyone. It was nice.
No, thank you.
Thanks.
Yeah, thank you.
Thank you. Bye.
I'm just gonna add with the library case from some of the documents I saw. Be careful what you're putting on Reddit. They pulled some Reddit chats from the one of the founders of that company that was basically kind of just pushing everything out, saying like, "Oh, this is going to be a great coin. This is what you should be investing in." And so like there is a document literally with like pages and pages of people on Reddit asking questions and him like, "This is great. You should invest in this." blah 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 blah, which is very
Ouch.
I don't want to say embarrassing.
Incriminating.
It's like literally right all there.
Wow.
Yeah, and on that point, I've seen as evidence in SEC cases, Telegram chats, Discords. It doesn't matter where these things are said. If they're said, you can be held responsible for it.
Somebody can bind him. Yeah.
Yeah.
I think we're probably going to end up seeing a lot more of this stuff as crypto becomes more of an everyday thing. I think if the end goal is mainstream adoption, there's a lot of people that are a little bit more risk adverse that don't necessarily like the pitfalls that crypto has in terms of not being protected. So, I think heading towards the future, which if we're all here, we probably think is going to happen is, if crypto is going to be used as a currency everywhere, then people are going to want to be protected. So there's positives and negatives to everything, but I think ultimately we're going to end up a lot closer to fiat than originally anticipated.
Hard to say. I think times like this with FTX, Celsius, Voyager, kind of bringing things full circle, it fosters a desire for added transparency. And that, I think, is the antithesis of the banking system and in many ways corporate America. And so perhaps we'll go back towards that, rely more on DeFi or exchanges that can provide proof of reserves, clear blockchain transaction history of their own holdings and what they're doing. So I guess time will tell.
Yeah. It's really interesting.
All right, I'm going to jump in here and kind of start wrapping things up just a little bit. I'm curious, this is a little bit more relaxed, a little bit more fun. Who bought Twitter Blue?
I've had Twitter Blue.
Yeah, you have the check mark though.
Yes, I have the check mark now. I don't know how I feel about it though. Now that like anybody can have it, and if you like go over, like if you click on the little verification check mark, it's like this person has the verification because they have Twitter Blue. It's not as fun anymore. I kind of want to be like sus. Just be like, I don't have the check mark. You don't know who I am.
I bought it. I'm definitely all for what Elon's working on, and especially if I can reduce ads. Like I'd pay $100 a month to not have any ads, and to support what he's doing, edit tweets, like all that. But mostly like just get rid of ads and not see all those promoted and boosted tweets and stuff. But happy to support what he's trying to do for the free speech movement with making that private.
Sure. Are there any Web3 aspects you want to see implemented into Twitter? I know like right before he bought it, they slowly were starting to introduce NFTs, but I know,
I also saw they had submitted an application to become like a payment processor within the past week or two. I don't know like what type of banking license that requires, but it'd be awesome, if you can do peer-to-peer payments like a Cash App or Venmo. I personally don't use those, but see a lot of value in other people using them.
Yeah, so I think it was a couple of years back, Twitter integrated through a third party, I think it's on the Bitcoin Lightning Network, that you could send crypto. And so perhaps they're trying to just integrate and create their own system. But yeah, I think we've seen over the years that Twitter has started to move more towards Web3, and hopefully under Elon's charge, it continues that momentum. So maybe they'll go ahead, Brock.
Sorry, there was some leaked text messages from that Twitter case from Elon Musk to Joe Rogan talking about integrating Doge into the platform so that people couldn't overtweet, and basically to get rid of some of the bots, you'd have to pay a small fee every time you post. And there was talks of that obviously being used with Dogecoin and Mask. So as the wallet. So I think it looks like it's a very real possibility that could be what ends up happening. And despite the fact that it doesn't really add any necessarily like inherent value to Doge, besides the fact that people have an incentive to hold it, I think when he comes out with that news, because of how speculative and hype driven the crypto market is, I think you could see some big things in Doge. Not financial advice, so you don't have to put the disclaimer there. But
Right.
I'm definitely keeping my eye on Doge. I think it's a very real possibility. Doge is also works on the Lightning Network. It's a chain of Bitcoin.
Oh, I didn't know
So
that.
it's I don't think it'd be a very big stretch to assume that's what's going to happen.
I can see that.
Sure, I mean, I couldn't agree more. I feel like definitely going to see more things implemented. I don't know how many of you are familiar with what's been kind of going on with Reddit. Reddit recently introduced NFTs.
Mhm.
So kind of how like you have your like Reddit avatar, they turned it into an NFT. And again, I'm just curious, would you be interested in anything like that on Twitter? So if you can already have an NFT, basically as like your little like hexagon in the corner, but especially implemented NFT kind of marketplace on Twitter.
I'm still kind of weird about I don't know, the idea of connecting my wallet to Twitter isn't it like it's not something I've done. I've thought about it a few times, but or really, I mean, connecting to any platform. I don't know. I just don't like stuff touching my wallet or like like Twitter makes so much money every year selling information, right? That's what they do. So I'm a little paranoid about stuff like that, but I like the idea.
Yeah, I'm more for decentralized marketplaces with NFTs, like using offer files and stuff. Like OpenSea, everything, they try to enforce royalties, but when you can do those on chain and do private offer files without hitting a marketplace, kind of like you do with Uniswap and true dexes, I think that's going to be a lot more powerful than these Reddit NFT marketplaces, the Twitter, and trying to do these big ones, but more so decentralize all that.
Yeah.
No, totally understand not wanting to connect your wallet. There was like a huge thing as soon as they like started dropping the blue tick marks that someone was immediately running a crypto scam, and it looked like they were verified.
I'm
So
sure
again,
there are there's a kid, I can't remember his name, but he took off. He was actually up in Canada and he was like 16. He was running a scam on Twitter, and there's actually you can pay money. I think it's like $10,000 for lifetime access to this Twitter interface, and you have access to any accounts. You can swap their passwords. I can't remember, or actually John McAfee. I think somebody got into his account and was posting junk coins. This was like years ago, but that's still very much a thing. And so I mean that's my concern. I would like to see what you were saying, Daryl. I think it would be better if we went more the decentralized route, but I really feel like it's like the more adoption is becoming a thing, like more people that are getting involved in crypto, it's for the money, right? Like they don't have that. They don't understand like the core value aspect of decentralization. And so it's almost like crypto is being like packaged and commercialized, and if Gucci with their NFTs and Starbucks with their NFTs, which is it's cool. It's a cool business model, but yeah, I would like to see more decentralized options.
sure, I've definitely seen that like flooding of stuff in the mainstream. Constantly, everyone coming out. Like I know Nickelodeon has their own like NFT marketplace. Very cool, but it's like okay, well I don't really need too much unless you want just pure nostalgia. Now,
Right.
This begs the question: are we going to see a flood of more crypto scams with Twitter? Since all you have to do is be verified.
Totally.
Yeah,
Absolutely.
Twitter's had difficulties for a long time with bots, fake accounts, and it's like now they just opened up verification to everyone. So I sure hope they figure out a way to stop the bots and then the soon to be influx of scams and fake verified people. But I guess if there's anyone that can do it, Elon can.
Yeah, literally on my other monitor, I was on Engadget reading an article about how Twitter blocked new accounts from signing up to its $8 Blue subscription. So if you created an account yesterday, today, you can't get your blue check mark using the subscription because they found people were creating accounts like LeBron and saying like, I want to be traded, or there's Nintendo of America got impersonated and it was like Luigi giving the finger to something, and all these new accounts that were getting these blue check marks and it looked real. So for now, like they've turned off new accounts. Now, if you still have an account that was created before yesterday, you can still get the subscription, but they're trying to figure out how to prevent new accounts from impersonating people.
Sure, and I hope.
Yeah, I think they're trying to use it. Sorry.
Go ahead, bro.
I think they're trying to use a monetary barrier to remove a lot of the rubbish from Twitter. But messing with the blue tick, do you know what I mean? It's something that shouldn't be able to be bought. I think it was a pretty silly move, to be honest, because if you got nothing to differentiate you from everyone else, then it's no longer a verification tick. It's lost all meaning. You're essentially just removing. You're cutting down on the bots, people who don't want to pay $8 to post garbage, which I don't think is a very big barrier. So I think the tick move might have been a little bit silly.
Well, I think and kind of to address that, because that was my thought too. I pay $8 a month and now I have this like blue check mark. So cool. But they were talking about implementing a new, like some other aspect, some other identifier that would be in place for, like Elon Musk, people that had the actual verification before.
Yeah. Yeah.
But then also to what you're saying, it's like, well, okay, then what's the point? It's like basically just, I'm not even verified. Like I don't have to send my ID in.
Yeah.
There were always ways to buy
mean?
verification too. Yeah. Previously, there were these media groups where you could spend $10,000 and, it doesn't matter who you are, what you do. They would go in the back end through the media creator tool or whatever that was, and they could verify anyone as long as you paid them the money.
Yeah. And that's still a thing.
I just think, $10,000 is like a bit of a more substantial barrier than $8 a month to be able to do that. Like I said, I think it's a move to try and cut down on the bots. But I don't know if it was the right way to go. Maybe they could have used some other sort of subscription to identify that you've paid money for your account.
Yeah, I have no idea. I check Twitter every morning because I'm this. I didn't introduce myself. I'm the social media manager for Gordon Law Group. I've gotten more spam in the last 2 days that I've had to go through and like feed through of people trying to message or replying as well. So who knows how well it's working.
Yeah.
All right, you guys. I think that kind of comes to an end. We're about at an hour here, which is kind of where I wanted to stop off. I appreciate everybody for joining. I really do, for giving this time. Thank you to everyone. And I know, Brock, it's like 3 a.m.-ish now where you're at. I appreciate you coming on and doing this.
No worries. Thank you for having me.
Thank you, everyone.
Yeah, if anybody has any last-minute things they want to add about Binance or FTX?
Not your keys, not your crypto.
Yes.
All right, if anybody who's watching, if you want to see us do this more often, I was doing it weekly, but we did switch to monthly. If you like these crypto roundtables, please leave a comment. If you have any other questions, leave a comment as well. I can try to get back to them, answer them as quickly as possible. Appreciate everybody watching, and we will see you in the next one.
Thanks, guys.
Awesome. Thanks, guys.
Thank you.